Silver just got hit, but the real danger is underneath the candle. Subscribe for daily updates. This was not a normal red day. This was COMEX reopening, Fed pressure, delivery anxiety, energy headlines, and panic selling all colliding at once. John A.G. here, and tonight the question is simple. Is silver breaking down, or are weak hands being flushed before the next move? COMEX metals pause every day from 5 p.m. to 6 p.m. Eastern, then reopen for the next session. That first candle matters because new orders, overseas reactions, and thin liquidity can exaggerate the move. In the notes, silver was down over 3%, gold nearly 2%, with silver near the low $70 area and gold near $4,600. That hurts. But price alone is not the full story. This week also carries the April 28 and 29 Fed meeting, the April 29 rate decision, Powell's press conference, core PCE, GDP data, and month-end candles. That means every dollar move, bond move, and Fed word can shake gold and silver fast. Now, the silver structure is the real issue. The Silver Institute still expects a sixth straight yearly deficit in 2026. So the debate is not, does silver exist? The debate is, how much available metal can meet demand at these prices? Registered silver is warrant-backed and deliverable. Eligible silver meets exchange standards but does not have an active warrant. A move from registered to eligible can matter, but it does not automatically prove the metal left the vault. So ignore panic screenshots. Watch repeated drawdowns, open interest, delivery behavior, and whether registered supply gets replenished. Gold has a separate engine. A major bank scenario discussed gold reaching $8,000 within 5 years if reserve allocation shifts continue. That is not a guarantee. It is a warning that gold is being treated as monetary insurance again. Then energy adds pressure. The UAE is set to leave OPEC and OPEC Plus on May 1, 2026, which can weaken oil coordination and increase volatility. The EPA E15 waiver also begins May 1, 2026, raising fuel supply questions, vehicle compatibility questions, and possible corn demand effects. And the U.S. Treasury sanctioned 35 Iran-linked individuals and entities tied to shadow banking. Energy, sanctions, inflation, mining costs, and safe haven demand all connect. So what matters tonight? Not one red candle, not one green bounce. Watch whether selling gets absorbed, whether silver reclaims levels, whether gold holds support, and whether physical stress confirms the story. Comment your signal: Fed, COMEX delivery, or energy headlines. This is market observation, not financial advice. Stay disciplined, because volatility is the test, not the thesis here.